Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky. We have Blake Morrow on the line, Chief Currency Strategist at Wizetrade. Blake, how you doing this morning?
I'm doing great, Joel. How you doing?
Good. We're doing good here. It's getting our show off here on a Tuesday. A trio of great guests, and you're the final one of the day. And you're a currency strategist, and a lot of talk in the currency markets about interest rates. First, let's just talk about the good data that we had coming out at 8:30. A big jump in housing starts here. So it makes people think, okay, interest rates are going up. And that's been a pervasive theme here in the TLT. Are we June? No. September? Maybe. December for sure. What's your take, Blake?
Well, first of all, thanks for having me back, and I always appreciate being here. And as far as rates go, in today's data didn't surprise us that it was going to be strong. We were talking about it about 3 hours ago. How we've had a weak, due to weather, weak first quarter, housing starts, building permits. The housing data was bound to be a little bit better, and economists were looking for a stronger number. We actually exceeded the average economist estimates, and that didn't surprise me at all. What's been surprising has been the dollar's bounce back and the move that you're seeing in bonds. How bonds are basically trying to force the hand of the Fed to push rates up sooner rather than later. And when you ask June, September, I think I know it's very premature and we're getting really close to the date, but I think people have written off June prematurely, and it's going to be interesting to listen to today's FOMC meeting minutes, because last month at the meeting minutes, the market was expecting a very dovish Fed. They're going to cite the weak economic data. They're going to really push out expectations to September, and the relatively hawkish or less dovish than expected remarks from the FOMC meeting minutes last month really suggest that the Fed wants to keep the options open for June. And Joel, the fact of the matter is the Fed has been pretty steadfast, and I don't even think Janet Yellen has really veered too far away from her original comments with saying that rates will have to go up within a couple meetings, and that was back in, I think, January or February. So June still, as far as I'm concerned, is still on the table, although everybody thinks that it would be absolutely crazy for them to raise rates. I still think there's a real small percentage chance that they could, and I think the market's showing you that with the relative weakness that we've seen in bonds.
That would definitely be a little bit of a shocker. They tested the water here. They've been putting it out there for long enough. You've been playing with the euro here a little bit, and counter move with the dollar. Tell us what you got going on in your euro position.
Well, the euro, and if you guys follow the equities, it's the FXCM. Over the last week, and if we go into the end of last week, myself, some of my co-analysts that work with us, we were looking at shorting the euro around the 114, 115 area. We found this really attractive because we know that Greece is going to come back into the limelight, and so myself and, like I said, a couple other traders and analysts over the Wizetrade group, we've been really targeting the euro to the downside. And what's happened is it's moved quite aggressively due to some remarks that came from the ECB early this morning. So what we're seeing is the dollar pull back, and we're seeing the euro, or the FXE, pull back towards its breakout point. And it's happened a lot quicker than I thought. I actually thought this move would really come after the FOMC meeting minutes, but we're seeing that move happen right now. And the euro is not too far off of some pretty key support. Its breakout point was at 110.50, and we're at 111.30. So we're less than a penny away from testing the breakout point, which I think is going to offer a great opportunity for people that want to be short the dollar. There's a lot of volatility here, and the thing about currency trading is we get to really benefit from the volatility that we see in the markets. But just like anything, Joel, and you know this, is you have to pick your battles, you have to pick your entries, and my golden rule, and everybody that that follows my type of trading, we all know we just don't chase the market. And right now, the dollar's kind of run pretty fast over the last couple of days, but we might still have a little bit more to go.
So do you layer into something like, when you go into these trades? I mean, obviously, it gets past your expectations. Is that something you do? You just kind of layer in over a couple days and try and average your cost up or down?
That's been my approach, like with the New Zealand dollar and the dollar Canadian, which, if you go to like the Pipzar blog, I try to blog once or twice a week there. And, I've been picking up the dollar Canadian as it was dropping towards 120. And with crude rolling, pushing back lower, the dollar Canadian's been rallying, and I've had a nice cost average moving into the bullish dollar Canadian move. The euro has been a little trickier. It typically I'll layer into it, but I don't like standing in front of a train. So I kind of like to see the train stop and then reverse before jumping on. And we've had 1,000 pip, or we call it a 10 big figure move, or really a 10-cent jump in the euro dollar over the last 2 months, and that's been a pretty big move. It's a scary one to stand in front of. So as it's been rolling over, myself and other traders, we've been trying to layer in, but it's just been moving pretty aggressively. So some of them you catch, and some of them like that, they're a little bit tougher.
Yeah, I mean, we talk about that a lot. Like if you see a major resistance level in a stock, and it's just trading it in a pre-market trading, and the first few minutes of the session, it blows through that major resistance, and if you were shorting it on the upswing, chances are you're going to get blown out. But how many times have you seen it go above a resistance level and then come back down through it, and you sell that resistance level on, when it's actually going your way? So it seems like you're implementing that same kind of trade in the currency market. Of course, they're a little trickier to navigate than some of the stocks here. Just real quick, S&Ps have come back to unchanged here, folks. Pre-market trading, we got up to 34 even. We're back down at the close here. Made a new low from the pre-market low by 1 tick. Let's see if we can stabilize. Moving on here, you mentioned the Canadian dollar here, and that had been rallying, very much tied to the crude oil prices here. Built that rounding bottom there. Got a little bit of a rally here, though. Are you taking profits on this, or are you gonna ride the pullback here?
Well, thanks for asking that question. You teed it up perfectly. I actually just sold I sold 1/4 of my position size just before I came onto your show. So I've been buying it basically at or about 120. And my cost average is like 120.40, and I just sold a quarter of it, just about 122.40. So I captured about 200 pips, which is 2 cents, and which has been great on a quarter of my trade. But I still think it's got further to go, because if you're looking at crude, and by the way, just for the record, the last time I was on with you, Joel, I was looking at crude as rolling over. It didn't. It actually rallied.
Okay.
It rallied. It actually rallied a little more aggressively than I thought. But that really, for me, trading the Canadian dollar, it set up perfectly to buy the Canadian around 120 when crude oil topped around 62 and a half. But crude actually looks like we could set up a little bit of a sell-off here in the next couple of weeks if we can break below 58, which will be beneficial to Canadian currency weakness, or the dollar Canadian currency going a little higher.
How about Goldman Sachs call yesterday on the crude oil market? It had a muted effect yesterday, but we were talking about the $59 level. I know you had mentioned 58. 59 was a pretty important level to me. It took that out, but well, I mean, you do your fundamental work, and when you do your technical analysis. I mean, how much attention do you pay when someone like Goldman Sachs makes a big call like that, especially in a widely followed commodity?
I don't, and I don't follow a whole lot of bank analysis research for the reason, and just to give you a most recent example, one of the really very well-known oil analysts, a lot of people call him the Peter Schiff of crude oil. They march him on CNBC all the time. He had said that crude oil was going to have this super spike, and we were at 105, and I was on Yahoo Finance saying, when we were at it was about $100 a barrel. I was like, well, based on demand and inventories and fracking and oversupply, I feel the crude oil is going to come down quite aggressively. And every bank analyst at that time, when we were at $100.95, they were expecting a much bigger push higher in crude. Very few of us believed that crude would come down. Now it's obviously come down quite substantially, but I think that this is a big move by OPEC and a lot of the Middle Eastern countries to try to squeeze a lot of the U.S. producers out of the market. So I think that prices are probably going to stay subdued and production is going to stay high for quite some time. I think crude oil will stay, within the $50 to $60 range for a while. I don't really foresee us going, really too high from here. But there's going to be value players out there. I think there's going to be people buying it as we dip towards 50 again.
Okay. All right. I know we talked to you time to time about, FXCM and, boy, just kind of just hanging in there, just kind of melting here. Never really has been able to recover from that Swiss National Bank move. And even though the Swiss has recovered, this stock hasn't. You do still clear there? Or any thoughts on FXCM?
Well, I don't trade the equity, and my securities license, so to speak, to when dealing with equities that expired way back in the 90s because I trade now. So I look at FXCM as one of those. It might be a value proposition, but at the same time, it's at a level that, looking at it, would I be a buyer? Not until some of the debt was paid down. You pay off the debt, and I think it frees up FXCM to do a lot of things and continue to grow. I still believe that they're the number one name in the currency markets. So I think it's a stock that you have to keep an eye on. But trying to value buy it here, I mean, it is cheap, but it could still get cheaper. Wouldn't you agree?
Yeah, no, it is. I've just been watching the chart of it. It's just kind of been a slow melt. We've been on the line with Blake Morrow. He's Chief Currency Strategist at Wizetrade, giving us his outlook on the market, on the dollar, on the euro. So thanks a lot. We really appreciate you coming on, and we'll have you on again soon.
Thanks for having me here, Joel. Have a great one.